these crypto altcoin shitcoin scammers that are pitching. I think that Bitcoin is just an extraordinary thing, and it touches people at spiritual levels. And a lot of people see it as, as a manifestation of time, as a manifestation of integrity, as truth, and we can get pretty deep there. I did a 9-part series on what is money with Robert Breedlove. It's posted on my website called, the website's michael.com, and it's posted there. You can find it on YouTube. And I'll save you the time and effort to go through it. My summary is money is monetary energy. And by monetary energy, I mean it's the apex energy, or the social energy of the humanity. If you have kinetic energy, electrical energy, any kind of chemical energy or the like, you can convert it into money. And then if you have money, you can convert it back into those energies. So if I had $100 million worth of electricity, I could convert it into $100 million worth of Bitcoin. I could store it for a decade. Then I could convert it back into electrical power at the prevailing market rate at the time. And I would think that'll probably be more than $100 million worth of electricity by then because of the way Bitcoin works. But money, monetary power, the power to do things. There's conservation of energy in the world. I can convert energy into mass into energy. I can convert $1 billion of money into property. I convert it into motion. I can convert it into power. I can convert it back. I think of Bitcoin as a monetary battery. Like if you had $100 million and you wanted to send it anywhere on Earth, you can't send $100 million of electricity from New York to Tokyo because you're limited by about 500 miles on the power lines. And if you send it 500 miles, you lose 4% on high voltage lines and 2% on the low voltage transform. So there's 6% degradation, and then you're stopped. If you wanted to move $500 million or $100 million worth of power from New York to Tokyo, you convert it into Bitcoin. You send the Bitcoin, you convert it back into yen, you buy the energy, right? That's how you move energy in space. It's a cool trick, saves you 6% interest or 6% cost, but it's not the best trick. The best trick is being able to spend $100 million worth of electricity 100 years into the future. Because if I store $100 million worth of electricity on a battery, you lose 2% a month. So you've got a 24% inflation rate or loss rate in a battery. And that means you're going to lose it all, right? In a decade, it's gone. You can't, and we all know you can't store electricity in a battery for a decade. But Bitcoin, on the other hand, will hold $100 million. You know, if you buy 100 Bitcoin, it'll still be 100 Bitcoin in 100 years. So you've got thermodynamically sound money, or you've got, in essence, a lossless energy battery. It works as a network to collect monetary energy, to store monetary energy, to channel monetary energy. And you can almost think of the voltage as the price of Bitcoin, or the force, the monetary force. As more and more people use it to store their monetary energy, the price goes up. The potential energy in the battery goes up. Right now it's 650. You can buy $650 billion worth of stuff, right? If you tap into all of that, as it goes up, there's more energy in it, and the energy flows. Right now there's $10 trillion of monetary energy in a gold battery, in gold. So as the energy flows, it's demonetizing gold, like demagnetizing something. The energy is flowing from one to the other, and that's how I view monetary energy. I would grant you there's a lot of other interpretations of Bitcoin for people that study it enough. So first of all, I bought $1.3 billion worth of Bitcoin. The way I did it is I wired cash into a registered exchange or a regulated exchange. I bought the stuff. I put it in cold storage. I have talked to $100 billion entities. I know at least 10 of them that have bought 500 million or more Bitcoin. They all wire cash, US dollars normally, into regulated exchanges They buy the Bitcoin, it goes into cold storage. Nobody's using Tether, okay? Tether is a very successful FUD. Tether exists primarily as a settlement mechanism for exchanges, and mainly offshore exchanges after hours. If they want to settle between each other from Singapore to Malta and it's Saturday, you know, they can't move it through US banks or the Fed wire system, and crypto traders or exchanges might be using it offshore, but it's not driving the market. Institutions, you know, all the major institutions are driving the market. They're all pretty much wiring euros or dollars into exchanges and buying Bitcoin. I'll tell you, so I think it's like very successful FUD, but it's totally irrelevant to the business. One more thing. I have a Twitter account and I have someone posting this fuck all stupid, is Tether destroying Bitcoin article. The guy's a moron, you know, pardon my French, whoever wrote it. He probably hasn't bought $1 million of Bitcoin in his life. I don't think he knows how it works, but I clicked on it today. And I should show you guys. It's being posted by this entity on Twitter that has 0 followers. It spins up fake Twitter accounts with 0 followers and posts it probably 1 million times a day or something on everybody's Twitter feed. It's like, check out this article, check out this article, check out. It's been posted 27, 30, 40 times, and it's 0 follower non-people. So I really think that there's some kind of crypto scammer running a bot and, you know, campaign on Twitter to pump Tether. Tether's a stable coin. It's irrelevant, right? There's nobody is gonna, no one is creating $40 billion of money out of the ether, buying 40 billion worth of Bitcoin to manipulate the price up. That it's like not happening. You couldn't do it, right? If you actually did that, then you would end up getting short squeezed one way or the other. So I really think it's utterly irrelevant. Although I would say in the crypto market, I noticed that there are all these crypto altcoin, shitcoin scammers that are pitching some other kind of crypto. And so now if they wanted to, for example, if you've got another stable coin, you'll destroy Tether with this FUD because you want people to switch to your stable coin. And if you've got a new coin that's supposedly got a better encryption algorithm, you'll say, well, quantum attacks are going to destroy Bitcoin. You need quantum resistant, whatever. And if you've got a privacy coin, then you'll hack on that. So I think a lot of the FUD, it comes from altcoins that are trying to scare people, and they're trying to get them to sell something or buy something else. But for me, I read this stuff. It makes no sense whatsoever. It's utterly irrational. It kind of boils down to a random person has decided to buy $50 billion of Bitcoin and then dump it on the market. And you should be afraid. And the answer is, I don't think so, right? That's ridiculous. First of all, I think that the Bitcoin community has, and the crypto community has a lot of crypto anarchists, and they tend to wear their heart on their sleeve, and they get really worked up whenever any regulator says anything about Bitcoin, and they overreact and like this massive inflammatory overreaction. For example, if Janet Yellen and maybe is going to be the head of the Treasury, they'll scan every word said by Janet Yellen for the past decade, and they'll go, she said 3 sentences in 2013 that wasn't pro-Bitcoin. Or, you know, there are people still posting that in 2013, I said something bad about Bitcoin, and they're still throwing it out there. So what's really been said? Christine Lagarde has said, we're concerned about stable coins. They don't want a stable coin euro moving, or they don't want to see hundreds of billions of dollars of euros moving on crypto rails outside of their AML KYC restrictions. So she said that. She said Bitcoin is a highly volatile asset. She said sometimes it gets used for malicious purposes. We don't want any funny business. And then maybe Yellen has parroted that, saying we don't want any funny business. Okay, Mnuchin suggested he'd like to actually have KYC, know your customer record keeping if someone wires more than it was like $10,000 a day to a private wallet, or $3,000, $3,000 you had to say you knew where the money was going. These are the kind of KYC, the anti-money laundering, know your customer rules that are wrapped around cash, stocks, bonds, real estate, gold. Pretty much everything on earth already has these things. The Bitcoin community blew up, but the fact of the matter is, if they wrapped KYC AML regs on private wallets tomorrow, it would be a net plus for every institution and every corporation. You'd probably see an avalanche, 10x, 100x as much money, because it's the fear of what might happen that keeps people from buying the thing. Like, for example, you can't wire $100 million of Apple stock to a private wallet in sub-Saharan Africa today. It doesn't undermine the value of Apple stock. In fact, it doesn't undermine the value of any stock that you can't wire money to a private wallet, nor, you can't wire $100 million worth of land in California to a private wallet, but it doesn't undermine the value of land. You can't move $100 million of gold to a private wallet. It doesn't undermine the value of gold. So the regulations we're talking about here are travel rules, know your customer, anti-money laundering regulations. No regulator has suggested with words in the English language or any other that they wish to deny people the ability to hold Bitcoin as a store of value. So the use case of a store of value, in my mind, is not even debated right now. What's debatable is, can I use it as a currency or a medium of exchange privately without like as a cash substitute without reporting to the US government? That's a debate. It's a non-issue, because if they impose the most draconian KYC AML regulations you could imagine, it wouldn't impair BlackRock, Guggenheim, Skybridge, or MicroStrategy from buying $1 billion of Bitcoin as an asset inflation hedge and an investment, right? So it's not really a threat to the store of value thesis. And I think that people overreact every time a politician says this. They're like, oh my God, they're going to take my Bitcoin away. They're not going to take your Bitcoin away. They're going to tell you that you can't wire $1 billion of Bitcoin to sub-Saharan Africa any more than you can wire $1 billion of Google stock. I mean, no one at Google is saying, shit, sell all my stocks. I can't wire them to a private wallet. So you've got $300 trillion of assets that are already subject to AML KYC. Nobody on earth, no corporation, no rich person, no institution is buying any Bitcoin other than on a regulated exchange and storing it in a regulated custodian. That's just the status quo. If Fidelity and Coinbase didn't exist, and if Grayscale didn't exist, nobody's buying this stuff. So I think as a store of value, we're just fine. Now, let me go to one more point. Gary Gensler is probably going to be the head of the SEC. Gary Gensler taught a class at MIT on Bitcoin. He's probably the single best regulator in the entire world. If God came down and picked the perfect person to run the SEC, you couldn't get a better person than Gary Gensler. If you go Google it, you'll find that the MIT OpenCourseWare has his 24-session course on cryptocurrency uploaded, available for you to watch. If you want to know what the SEC thinks about Bitcoin, watch Gary Gensler teach. I happen to have good relationships with MIT's Digital Currency Initiative. I'm a supporter of it. Oh, wow. I contribute to it. I give them $1 million. And I asked them before the Biden transition took place, I said, what do you think? They said, well, Gary Gensler's on the transition team and he's really pro Bitcoin. So if he gets a role, that'll be good. Okay. So everybody likes him. The head of the OCC is well known in the crypto community and understands crypto and is supportive. I think the rumor is that the head of the CFTC is probably also going to be crypto sophisticated. So, in your worst nightmare, if Janet Yellen got up, what's she going to do? She's going to continue with Mnuchin's AML KYC rules. Don't wire billions of dollars to secret people. By the way, you know what that rule required? It means that if you wanted to take $100 million or $1 million off of an exchange into a private wallet, you would have to say it was yours, or you would have to say whose it was. If you wanted to evade that, you would simply wire the 100 million to yourself, say it's my wallet, and then not tell them when you sent the Bitcoin to the next place. For malicious purposes, you'll have to answer to the FBI or Interpol or the IRS. I mean, so what does that mean? Yeah, you got to comply with the law, okay? And so complying with the law is irritating to crypto anarchists, and that's why they make a big deal of it on Twitter. But complying with the law is not going to be a problem for corporations, institutions, and high net worth individuals, because I think they'll find a way to deal with that. So I really think all this regulatory FUD, it's just overblown. People are getting worked up, much ado about nothing. And if Janet Yellen got up and decided, I'm going to do the worst thing I can do to Bitcoin tomorrow, she'd be sitting negotiating with Gary Gensler. And they would split the difference. And they'll probably do something like apply, can you expect that we'll have rules applied to Bitcoin that are similar to rules applied to other asset classes that billionaires own? Probably. Do you think the billionaires are concerned about it? The narrative that is forming is Bitcoin is the dominant digital asset network, and crypto assets are 1,000 times more efficient way to move money around, and 1,000 times more efficient as a underlying base layer for the 21st century financial systems of the world. And these are the messages that are being articulated by all of the more educated regulators, of which the Genslers are leading in that charge. Brian Brooks did a good job of sending that message that this is critical to the future leadership of the United States in 21st century fintech. This is going to be supported by Square, supported by PayPal, supported by Jack Dorsey, supported by Twitter, supported by, I could list names, but the point is, this is not crypto anarchists and gamblers offshore fighting for privacy and individual sovereignty. This is really technology. And if the United States does anything to impair the technology, they'll slow us down. So I think the watchword is regulatory clarity will accelerate the adoption of this new technology to the benefit of the United States, and it would be devastating to our national competitiveness to slow this down. So that's the high-minded tech message. The more political message is, this is the most popular bipartisan asset class in the world. 100 million people own it, including a ton of Democrats, a ton of Republicans, and all your voters. You're not going to want to undermine their asset. And my last point is, Bitcoin's got a senator, and the Senate split 50-50. Bitcoin's got a congressional caucus. And so it's the best politically represented asset, in the world that I know of. I mean, no stock's got a senator. In fact, it's illegal for a senator to promote a stock. It's not illegal to promote Bitcoin because it has been regularized as property by the IRS and the SEC. And there's no sign of that changing. So I think there's FUD. But in fact, there's a lot of intelligent, very, very intelligent, exceeded my expectations, regulators coming in with the Biden administration. I think they're going to be more progressive, more thoughtful, more crypto informed than we've had at any point in time. And it should be very bullish for the asset class as far as I can see. I have not heard anything that anybody's said that gave me pause. The risks, there's a 1% black swan, unknown risk that no rational person could discount because we can't know the unknown. So it's a new thing, 12 years old. So there is the black swan risk, and you have to take that into account. I think it's highly likely you're going to see regulatory FUD every quarter for the next 10 years. Oh, I heard this country was, the Venezuelans are going to ban it. The Chinese did this. The Russians did that. They might tax it differently. You're going to hear that going on. And you're going to get other asset class risk and FUD. The people that are invested in gold are threatened. People that are invested in other cryptos are threatened. People that are invested in what happens, when this thing gets to $10 trillion, it's going to be more threatening. When it gets to 20 trillion, it'll be more threatening. When it gets to 50 trillion, it'll be more threatening. It should logically, reasonably demonetize all the bond indexes, all the stock indexes, all the cash, and all the gold. And if it demonetizes all those things, then you're going to get FUD and political pushback, maybe more than FUD, right? Like, it's like if I felt like if I owned Vanguard 500 mutual fund and I had $1 trillion in it, and all that money was flowing from my Vanguard fund into a Bitcoin fund, maybe I'm going to push back in some regulatory jurisdiction. I think you should expect that to happen. I think that the good news here is that it'll probably get stronger only as the asset class gets bigger by an order of magnitude. So, by the way, I've been worrying. I fall in the category of a guy that when Amazon stock was like $800 and Jeff Bezos was at war with Donald Trump, I was worried. Oh my God, Jeff Bezos bought the Washington Post, is at war with Donald Trump. Is it time to sell Amazon? You know how that story ended up, right? I mean, Amazon's at 3,200 and Jeff Bezos was at war with Donald Trump and Washington Post was at war with Donald Trump. And it would have been a big mistake, By the way, last I checked, Jack Dorsey was at war with the President of the United States. So we know how that turned out, right? And so, there's going to be regulatory FUD and pushback and volatility. And the more successful it is, the more pushback there will be. And you can't discount the fact that there could be a black swan. And I can't tell you what it is because I don't know. But here's what I can tell you. Take your portfolio and divide it into 10 pieces and then try to invest in 10 different things that all could go to zero or could go up by a factor of 10. Now, I've got one thing, but by the way, 10 years ago, my portfolio would be Apple, Facebook, Amazon, Google, maybe Microsoft, Twitter, cool things. You want to go crazy, try something else. But I could have given you a list of 5, 10 things. PayPal, Square, things that could go up by a factor of 10 that could be cut in half. And that's generally my criteria. Will it be cut in half? Will it go by a factor of 10? Buy something that's more than $100 billion or more, in market cap. It's got 100 million users and it's not done yet. Now, fast forward to 2021. I got Bitcoin. That could go up by a factor of 10 or a factor of 100. I can see Bitcoin going to 1 million. I can see it going to 5 million. Because if it simply replaces all the indexes as a monetary index, money, why shouldn't it go to 100 trillion in market cap or something? So I got that, and it can go to zero, but I don't think it's going to zero. I think there's a 1% chance of a black swan. I think it's going up or it's chopping around. Now, do I think Apple, Amazon, Facebook, or Google are going to go up by a factor of 10 from this point? Not really. I think they're plus 20%, minus 20%, plus 100. Maybe they'll double. Maybe they'll triple. You make a list of everything you can invest in that could go up by a factor of 10 or 20 or 30, a screaming winner. You can only lose $1. You can make $100. And maybe you've got some other things. But here's the reason why I think it's a simpler environment today. If the Fed and the EU Central Bank were inflating the money supply 2% a year, the cost of capital is 2%. Any company growing more than 2% might create value. When the cost of capital goes to 5%, you need a company growing 15, 20% to create value. And that was the situation for a decade. The cost of capital was 5 or 6% in the US and Europe. When the cost of capital goes to 15%, if they're going to print 15% more broad money supply, if the reserve ratio at a bank is 0, that means every bank can issue infinite loans with no reserves, right? Thinking about this, every bank can issue infinite money, no reserve. Fractional banking is printing money. The central bank is printing money. third world developing countries are printing more money. It's the most loose monetary environment in the last, I don't know, in our lifetime, maybe in our lifetime. I can't remember a time when there was more money, more deficits, more money being printed. You own a bank with $1 and you issue $20 billion of loans. Think about it. You printed $20 billion in cash. So we're in an environment where it looks like for the next 5 years, the money supply is going to expand by 15%. That means assets are going to go up by 15% if they're scarce. That means you have to buy things that are going to go up faster than that. And that means that the hurdle rate just got 3x higher. And not only is the hurdle getting 3x higher, but Amazon, Apple, Facebook, Google just had a meteoric run for a decade when it was obvious they were going to have a good run. They're going to have to invent something really cool to go up by another factor of 10. And might they do it? They might. I guess I would say that if you've got 10 things, divide your money 10 ways and bet on the 10 things. If you've got one thing or two things, divide it 2 ways, right? You could do a thing where you invest 95% of your money in conventional assets and 5% in Bitcoin, and then if Bitcoin goes up by a factor of 10, you'll have still a decent return. But then you'll be wondering why isn't it I'm not a billionaire right now? Because you could have been a billionaire. You put 10 million in and you get 100x return, you'll make $1 billion. So you'll be kicking yourself if you didn't do that. Everybody's got to make their own decision. But in my life, I never seen something that was such a screaming signal. You've got a $200 to $300 trillion addressable market. You've got a problem. Money is not sound. You've got engineered thermodynamically sound money. You've got a dominant network. Everybody's decided it's the network. It's exploding. The signal that it's exploding is it's growing 200% a year every year for 12 years running. That's the signal. If you wait 30 years, your life is over, right? How many years are you going to wait before you actually get on that train? I mean, 15, 20, 25, 30 is done, right? I mean, 30 is a career. So I would say that it was highly complicated, risky, and uncertain if you go back a couple of years. It got to be a much easier trade in March of 2020. And every month since March of 2020, it's been de-risks exponentially, and then the need is exploding. Here's my opinion here. The smartest, wealthiest people I know got rich and stayed rich with a simple strategy. You create or you buy assets that are high quality, pristine assets. You hold them forever, and when you need cash to live, you finance them. You borrow against them. Like I buy a football team and I hold it forever, and I borrow, and I have a good banking relationship with a bank, and they loan me money at 3% or 2% interest. I buy a city block in New York City. I hold it 100 years, and then if the Fed prints 10% more money or 5% more money, the building goes up 5% in value. If it's truly desirable. If you have assets that are scarce, desirable, and unimpaired, they're not impaired. You know, I use that criteria, right? Because like for 100 years, it was New York City real estate, and maybe New York's not the greatest bet this year. But football franchises, city blocks, if I had an unimpaired, Jeff Bezos held Amazon stock, Mark Zuckerberg held Facebook stock. So buy Bitcoin. Am I going to sell it? No. I'm never going to sell it. I'm never going to, here's 2 things I don't want. I never want a capital gain tax, and I never want an income tax. If I buy an asset and then I'm trading on it and generating yield, I could generate 30% yield, but then I owe 15%, I owe tax on it, right? So if I had $100 million and I trade it, I'm taking a lot of risk. I generate $30 million in yield. I pay $15 million in tax. I have $15 million after tax, and I'm trading it, and I've got all this execution risk.
Right.
If I hold $100 million and Bitcoin goes up, you fill in what you think it'll go up. It's been going up 200%, but if it went up 20%, the number wouldn't. If it was 5%, the answer wouldn't be different. Let's say it goes up by, it doubles a few times. Well, if it goes up 20% a year, every year, if I need money, I set up a relationship with a bank. And there are companies, some of the new emerging crypto exchanges will give you a loan. NYDIG will give you a loan. Genesis will give you a loan. Eventually, you'll see loans coming from lots of banks, and the entire Bitcoin banking sector will develop. So take your $100 million, borrow $10 million, pay. Right now it'd be 5% interest. It wouldn't be 50 basis points because the sector isn't as competitive as in stocks. If I had $100 million of Apple stock, I could borrow at LIBOR plus 50 basis points, right? I could borrow $10 million and pay less than 1% interest on it. So right. I would just, and if I told you the stock was going to go up 10% a year, you would just hold it forever.
Yep.
So why do I sell an asset? I sell it because it's impaired. If you have a company, it's impaired by a bad CEO. It's impaired by a bad product release. It's impaired because a regulator makes it illegal. If I have $100 million of land in California, why can't I do that? Well, I probably can, except for the fact I might get real estate taxed to death. The governor of California might impair it by passing a zoning law on it, right? If I have land and land gets taxed and it gets impaired, stocks have execution risk. On the other hand, Bitcoin, it doesn't have the property tax risk. It doesn't have the execution risk. There's no new product. It just exists to exist. So yeah. The strategy is simple. You buy it and you hold it. You don't owe a tax. If you bought $1 million on Coinbase and then you simply transferred it to custody or to your own wallet, there's no taxable event when you move the Bitcoin around in kind. The only taxable event is if you transfer it to another person. So if you sell it, that's taxable. If I buy $1 million that goes up to be worth 10 million and you sell it, then you owe capital gains on 9 million. If you give it to your daughter, or you give it to someone, you've got gift tax restrictions just like any other property. If you buy $1 million of Bitcoin and you hold it and it becomes worth 100 million, you could sell it and you'd pay 30 million or 40 million in capital gains tax, have 60 million afterwards. But that'd be stupid because you would be better off to borrow $50 million against the 100 million or 20 million against it. If you borrow $20 million against $100 million in Bitcoin, pick any number, borrow 200,000 against $1 million in Bitcoin, your debt to equity ratio is 20%. Your expenses can go up by 20% a year, every year forever. As long as Bitcoin goes up faster than 20% a year on average, your debt to equity ratio falls. And you will, in essence, what you're doing is you're doubling your money every year while your debt to equity ratio falls. You never incur capital gains tax, short or long term. You never incur an income tax. You build up liabilities. And when you die, you're going to have borrowed $10 million against 50 million in assets or whatever the number is. And then you've got your estate tax issue you got to work through. And that's a different issue. But as an individual, the only reason, why would I ever sell the Patriots if I own the football team? Here's when I sell it. I sell it when I think that no one wants to watch football anymore. When football is an impaired franchise, I would sell it. But if I thought people were going to appreciate that thing for 1,000 years, I would never sell it. So there's risk in art. There's risk in every other asset. There's risk in New York City. People can leave the city. But Bitcoin is like, you're buying a block in cyberspace, 21 million blocks. There's no reason why it can't last for 1,000 years. Everybody wants to live there. There's no reason in theory why it should ever become impaired. Therefore, it's the longest duration asset, and there's no reason in theory why you should ever sell it. You should just get a good banking relationship to borrow against it, and that solves your taxes.